Hey everyone, good weekend. This is Doc Severson for the ReadySetCrypto OMNIA trade of the day for Sunday, the 3rd of October. Let's start out by looking at BTC versus the US dollar in a log chart, logarithmic chart. You can see how this goes from $1.45 up to, 53,000 or 76,000 up here. And what it does is it normalizes percentage gains. So you can see that we had this extraordinarily strong move, but it only got Bitcoin up from $1 to $1,200. Second move was from about 180 up to close to 20,000. And this one has gone from roughly 3,800 up to somewhere in the mid 50s. Actually, take that back, about 65,000 is where it peaked out. So what we're seeing is the swings are getting a little bit less strong if this is a consolidation pattern. And they're starting to tighten up a little bit as well too. So I'm wondering whether or not we're going to see this thing break out and we're going to see this whole thing just sort of arc to an infinite slope to the upside, which would actually be kind of good, although I think it would catch a lot of people by surprise. My purpose for using the log chart is just to keep this as our North Star to understand what the trend is. So far, the trend is still to the upside. We still do have the potential of this setting up as a lower high, rolling over. Big question mark, although the last couple of days looks really pretty good for the future of this. Now we'll drill into more of the standard time frames. So we'll go down to the weekly chart, and this is the linear chart. Okay, so again, the structure here, initial swing up, moves to a weekly downtrend. That is a corrective move. That was a strong corrective move for 3 months or so. And then we've seen the price explode from the bottom in the summer. And what I talked about as we got into the month of September was we got to have a higher low. Well, guess what? So far, the month of September has created that higher low for us. Now we have the price in kind of this decision box. All right, there's the highs, there's the lows. If the price ends up putting in a lower high from here and falling out through the bottom of the decision box below 40,000, what this creates is this whole pattern here ends up being a lower high, and then we'll probably end up going maybe as low as 20,000 again. So that is a definite possibility, although again, last couple of days are real strong, makes it more likely that it's going to break out through the top of the box. Anyway, that's what I want to see. So there is some confirmation bias. I'll warn you on my end. I would definitely like to see the price break out above 55,000 here on its way to reclaiming the all-time highs. But at the same time, I'm not drinking so much Kool-Aid that I can't see this setting up. So what I'll show you as we get down into the smaller time frames is what to watch for in case this were to fail. So again, just to net out the weekly chart, we got our lower or higher low setting up here. So this is the higher high, higher low. This has almost completed the round trip. We had this downtrend, lower highs, lower lows. To change that polarity, we need this to change into a higher high, check. We have a higher low, check. So far this looks to be a good, valid change in polarity back up to an uptrend. However, it's not truly confirmed until this price goes up and goes through there. And then that completes the process 100% into a change in polarity to an uptrend. It seems to be, if you're going to wait for that long, it seems to be way too long, right? So this is why we tend to look for opportunities to look for that higher low and then take the trade in this direction. And then even if it doesn't work out, we at least get some gains in that direction for a trade or for an investment. But if we do fall back down through there, this is where we need to stop ourselves out at 40,000. Okay, here's the daily chart. Now let's put this whole swing on a fib retracement. So we're going to put this whole swing here from bottom to top on fib analysis. And what we already talked about is that 61.8 has got to hold, which is right around 38,000 and change. And it did. So this moved into a daily downtrend, but it put in a higher low higher high. So we have now converted that back into an uptrend. Higher low, higher high. This is the trap entry here at 45,000. What we would want to see from this is if the price is going to put in a higher low here, hold that at 45,000 and then continue to go like this. Now it may not. We may just get a what I call a high and tight consolidation up in this area. So far, that's what it looks like it's doing. So we've had a really good Thursday, Friday, Saturday, Sunday so far, and markets look really good. Now, the other thing that we did that I talked about was we cracked through this line. So on Thursday, I was saying, okay, good start, but it's got to break through the descending trend line and it's got to get above 45,000. Check and check. So good start to the beginning here. Volume, not so great. Not so great. I wish it was stronger volume. I wish we had stronger volume like this, but this was an epic short squeeze coming off the bottom. That was a hell of a lot of people being on the wrong side of the price. This one was a little bit more obvious, so we might have a little bit less volume. Okay, so now let's talk about the elephant in the room. What would we need to see the price fail at this point and start to head lower? Well, here's where at some point we would see the price pull back and we would say, all right, so far so good. That's all right. That's a higher low. And then we'd see some type of bounce from there. And this is how it would start. It would start out with a small bounce to create a lower high from this pattern, and it would drop very rapidly from there. So remember, rule number 2 of fractal market analysis is that reversals start from the inside out. They will start from smaller time frames and then they will propagate. So if we start to reverse to a downtrend on the daily chart, if we go out to the weekly chart, what we'll see is that eventually that reversal will spill over onto the weekly chart because it will put in a lower high, and then this whole thing becomes a lower high, and that's actually a monthly lower high as well. Reversals start from the inside out and they propagate higher in time. That's rule number 2. Now, just a couple of quick things before we move on. Let's go over to the RSI Laguerre. And what's really cool about this is that this whole move up has come without really debiting the energy at all. And in fact, the energy has actually gone higher as the price has gone higher. And this is because we had a former downtrend, which was starting to get a bit more linear. And so this is actually an energy relief to go back up to the upside. You always have to ask yourself, what does the market want at every time frame? If we go out to the weekly chart, we look at this and we say, okay, so the market was getting a little bit tired on the uptrend here. Pullback is building up the energy again. That's all good. What does the market want? The market wants a little bit of rest and relief, pulls back, it does exactly what it wants to do. And then if we go out to the monthly chart, we can start to see as we get into this new month of October, the energy is starting to bolt up higher. This is all one big consolidation pattern. This is all non-linear price action. And this makes sense because the price had gotten too extended to the upside, way into exhaustion. Range expansion moves to range contraction. This is all very normal. And guess what, guys? Even if the price does fall back down below 40,000, this is all normal too, because it would still be under the context of this much larger consolidation pattern. Now, if we get the energy back up above 55 into the 60s and so forth, then the market technically no longer needs to consolidate. It's free to trend again. And this is where we have a higher probability of seeing the former trend reclaim itself. So we're still a little early here, and we may need to bounce around for another couple of months. So if we do see the price drop from here, don't panic. Look at that as a buying opportunity, perhaps accumulate a little bit more at lower prices and keep the larger structure, the North Star, in mind. Okay, so that's 9 minutes on BTC versus the US dollar. Let's go over to Ethereum. Ethereum is actually a little stronger over this weekend. We had another short covering move here on modest volume, not great volume. It did hold the 61.8% retracement down here to the confluence of that and the 200-day moving average, which you can see in green. So that's all good. and it's been strong the last couple of days. So Ethereum looks really good, is getting some good press out there. I'm not going to repeat the entire analysis on this, but the same comments for price action makes sense. So we have Cardano has actually claimed the number 4 spot. So what I want to see from Cardano, if we go out here and put in this trend line, the trend line is just sort of being flirted with at this point. You can see that the price here has printed a higher low. There's no subsequent higher high though. We need to break above about 250 for the higher low to be printed. So that'll be welcome if it gets to that point. So now I'm going to go through the top 20, top 50 or so and see if there's anything here worth really looking at. Algorand looks fairly strong. We're seeing a lot of good charts that are out there today, but unfortunately things are just up, a couple of percent or so. But Tezos smoking it today. And this is actually it's kind of a sloppy one, but this is really an ascending triangle pattern. It's an ascending triangle pattern. We have essentially, I'm gonna take some license here with this. I'm gonna call these equal highs at about 750 because these are just upper wicks on the candlestick, but the closing was all around between 7 and 750. And so we have a series of higher lows along the way. This is an ascending triangle pattern. This is bullish. We're getting the breakout on average volume from this. The upside projection for a pattern like this is essentially the open end of that ascending triangle. And so that's going to go from about let's call this $4 up to 750. So if we add 350 onto that, we're going to have an upside target of about $11 as the measured move for Cardano. Oh, I'm sorry, Tezos. Here's EOS is up 10% today, but one of that reasons is because it's still playing catch up. And you can see that this has only just come up to the descending trend line. So I would say some coins are really starting to separate themselves with much, much better trend than others are. Like Tezos was one example of something that's got a far superior trend versus many of the other coins we want to take a look at here in a minute. Now here's one which is a surprise. Here's OMNIA, and OMNIA has gone through here's the old golden cross again, death cross, golden cross. This is just a big basing pattern, which is out here. So this is a very familiar pattern that we're used to seeing, which is this cup, and it sort of had an attenuated handle pattern to this, but then from this breakout, and you can see from this, if we throw on fractal energies, that we had a massive amount of energy showing up here, massive. Even, let's see, the weekly chart was even pretty well loaded up as well too. So that's when we have a higher probability of breakout, is when we have more than one fractal time frame all loaded up, wound up like a rubber band, ready to go. Here's another one that's got a great pattern. This is Hex versus the US dollar. This thing is completely wound up on the daily chart and is starting to recover on the weekly chart. This may take another couple of weeks or so because of this extraordinary move that it saw. So be patient with this one, but have some price levels at which you will either accumulate on the dip or buy on the breakout. So we've looked at a lot of good charts here in the last 10 minutes or so. Want to bring up a chart that's not looking so good. So you will see these types of charts, and what I want you to do is to avoid charts like this for right now. Now, I know that there's this sort of overall, buy the dip mentality out there, that the lower the price goes, the more attractive it is because it's a lower price. Well, if you learn nothing else from 2018, 2019, and the first part of 2020, you remember that what is low can go much lower. So I just avoid assets like this. I look at the weekly chart and say, what's the trend here? Is this an uptrend or a downtrend? Well, quite clearly, this is a downtrend. We're making lower highs, lower lows along the way. Yeah, you can be a hero. You can tag this thing for the very bottom tick, but that would be great, but you just never know. And I think it's just much, much easier to wait for these descending patterns to break out to the upside, to show more volume and show more commitment to that. And then just look for, during an uptrend, look for a pullback during an uptrend. This is not a pullback. This is a downtrend. The pullbacks are happening on the rallies up. Those are the pullbacks. And then here's the primary trend back to the downside. So don't confuse yourself with trend and value on assets like this. Wait till they start to show a confirmed uptrend again. It's much easier to buy things that are heading higher. Guys, that is it for this weekend's report. Hope you have a great weekend, and I'll see you back here on Monday. Take care.